This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices tumbled about 6% to a 4-week low on Friday on worries that interest rate hikes by major central banks could slow the global economy and cut demand for energy. Also pressuring prices, the US dollar this week rose to its highest level since December 2002 against a basket of currencies, making oil more expensive for buyers using other currencies. Brent futures fell $6.69, or 5.6%, to settle at $113.12 a barrel, while U.S. West Texas Intermediate (WTI) crude fell $8.03, or 6.8%, to settle at $109.56. That was the lowest close for Brent since May 20 and the lowest for WTI since May 12. It was also the biggest daily percentage decline for Brent since early May and the biggest for WTI since late March.
China's national oil majors are in advanced talks with Qatar to invest in the North Field East expansion of the world's largest liquefied natural gas (LNG) project and buy the fuel under long-term contracts, 3 people with knowledge of the matter said. It would be the first such partnership between the two nations, among the world's top LNG consumers and producers, as the Middle Eastern energy exporter shifts to expand its Asian client base at. Global energy corporations used to be the main investors in Qatar's gas industry. The Qatari supply deal will help China create a buffer against spot price volatility and diversify its imports. Relations with two major suppliers, the United States and Australia, are at a low point, and another, Russia, is in the midst of a war and faces widespread sanctions. Beijing views gas a strategic bridge fuel to replace coal on its path to carbon neutrality by 2060.
Moving on to the top news in the energy sector.
A heatwave in parts of Europe has piled pressure on energy systems as demand for air conditioning risks driving prices higher and adding to the challenge of building up stocks to protect against any further cuts to Russian gas supplies. Sweltering temperatures have arrived earlier than usual this year, notably in France and Spain, prompting consumers to turn on air conditioning despite historically high power prices. Europe, meanwhile, is racing to fill storage ahead of what is normally the peak demand winter season as it fears disruptions to the 40% of Europe's gas supplied by Russia, which has already cut off some customers.
U.S. President Joe Biden on Friday called on China and other major economies to redouble their efforts to combat climate change and improve energy security, warning that Russia's invasion of Ukraine had sharpened the need for urgent action. At the third virtual gathering of the Major Economies Forum, MEF, under his presidency, Biden urged countries to accelerate moves to cut methane emissions, adopt ambitious targets for zero-emission vehicles and work to clean up global shipping. He also called on countries to spend a collective $90 billion to speed commercialization of clean technologies, and to develop new fertilizers that cut agricultural emissions and boost food security.
Next, we have the top news in metal markets.
A European fund to invest in critical minerals needed for a transition to zero carbon emissions is seeking billions of euros of public and private money for a launch early next year, an official working with an EU initiative on the project said. Europe and the United States have been scrambling in recent years to restart domestic production of rare earths, lithium and other raw materials used in electric vehicles, EVs, and to wean themselves from dependence on China. The European Raw Materials Fund is due to start with around €2 billion, $2.1 billion, but eventually the region will need more than €100 billion in investment to produce enough critical minerals, Bernd Schaefer, chief executive of EU-funded EIT Raw Materials, told Reuters this week.
The London Metal Exchange, LME, approved rules on Friday for members to report all over-the-counter, OTC, positions. A move taken after off-exchange trading was partly blamed for a wild spike in nickel prices in March. This will improve the ability of the LME to oversee activity holistically through increased visibility, ensuring future market stability, the exchange said in a statement. The exchange, owned by Hong Kong Exchanges and Clearing Limited, was forced to suspend nickel trading and cancel all deals on March 8 because of disorderly activity caused partly by a large OTC short nickel position. We will now look at the top news in the agricultural sector. India is likely to impose a ceiling on sugar exports for a second straight year starting this October, aiming to ensure ample domestic supplies and keep a lid on local prices, industry and government sources said on Friday. India, the world's biggest sugar producer, could cap exports of the sweetener at 6 million to 7 million tons in the 2022-23 October to September season, about one-third less than the total to be shipped out in the current season, industry and government sources said. They asked not to be named as they were not authorized to speak to media. A government spokesperson did not immediately respond to a request for comment.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.